Were you listening last week? I hear that you'd like more information about your personal credit, your business credit, how you establish, how do you make it pop? Stay tuned. Welcome to the WorkHARDAholic Show with your host, the original WorkHARDaholic, Shirley Crawford, author, speaker, and small business consultant for over 20 years, helping you to work hard, play harder, and business better. Hello, and welcome back to WorkHARDaholics. I am Shirley Crawford, your host, the original WorkHARDaholic. And as most of you know, or I hope you know, the point of this show is to help entrepreneurs, wantrepreneurs, solopreneurs, I can say it, solopreneurs, and C-suite executives, and you to level up in your finances, to have the resources and tools that you need for your business, to help you do better so that when they're talking about inflation, you're talking about, I'm still going to level up. That's what we're here for. If that's what you're here for, let's go. So last week we talked about credit. It's not a dirty word. It's not. And if I have a whole philosophy about credit and money and financing, because a lot of us were taught that credit is evil. Credit is bad. And here's the thing. And you're wondering why Trump has next to nothing reported on his taxes, but yet and still has buildings. It's tearing down buildings and still has lots of money to burn. He understands the credit game. There are millionaires who are getting food stamps. I'm just saying. They know how to utilize the system. And I'm not saying that you need to go that far. We can still be people of integrity and character, but I need you to have a full understanding of how the credit game is played, especially in a time where we're talking about inflation, deflation, and we're not sure exactly what's going on with our money and Bitcoin and everything else. I want you to have tools that you can utilize, that you can take care of you and your family, regardless of what's going on out in the community. All right? If you're on board, let's keep it moving, okay? So I want to start off by talking about what's involved in your personal credit, right? So we talk about, like, most people know you have your credit score, credit ranking, but we don't always know how you get it, what it means, and how do you keep track of it, and what do you do with it. On my end, the reason why this is relevant is because in dealing with entrepreneurs, dealing with businesses, you need a car, you need a building, you need equipment. And most of the time you don't have 10,000, 20,000, 30,000 or more. And some of you need equipment that costs like hundreds of thousands of dollars. You might not have that sitting in your account. Well, how do you play against the big boys when you don't have the big toys? For those other businesses, when they sign a contract, they can go to the bank and get a loan, a line of credit, or already have a line of credit established, and they can get what they need. How do you compete? Well, first thing to know is that your business credit, your ability to purchase supplies, whatever it is that you need, equipment, your rent, whatever else, it's based off of your personal credit. A personal guarantee is what they call it. Your business is a baby. It's just getting started. It's 2 years old or less, and you haven't bought anything. You don't have that Quill account. Keep that in mind. You've never purchased anything. You don't have even Net 30 accounts or invoices. So you have no credit history. You can't show credit worthiness. So then you go to the bank and like, I want to buy this car. It's $125,000 because we need this truck, this flatbed. And they're going, that sounds great. Who are you? And what credit history do you have that we would want to give you money, especially unsecured money? That means that you're a promissory note to say, hey, you give us $100,000, we're going to buy this vehicle, we're going to buy XYZ, but we're going to pay you back. How do they know that? It's like some stranger walking up to you going, hi, I'm Joe, and I work in, that would be not related to you, but Joe comes up to you and says, hey, I want 500. You won't give Joe $5 unless Joe can show you that Joe is worthy, that either, you work with him and you both get a paycheck, or you have some history. You've seen what he does with his money. You see him every day. Bankers don't have that relationship with you. You wouldn't do it. Why would you expect them to do it? Okay? So I want you to be able to get what you need. That no matter what, lean or whatever's going on, you can get it. So we're going to start from the beginning. A lot of times when people talk about credit, outside of the whole mental piece of what we were just talking about, like, do you know the range of your credit score? Do you even know what a good credit score is? Do you know that there are multiple types of credit scores? So for the most part, if you're dealing with your banker, they're looking at your FICO score, maybe your Vantage score. They're pretty much in that same category. But there are others. When you're looking at Credit Karma, the score they're looking at is not the same score that your bank is looking at. So you're looking going, but Credit Karma. And Credit Karma is a lovely product. Don't get me wrong. Might have to sign up for an affiliation with them. Great product. But you have to be realistic in knowing about what value it has. It's great for showing you the direction you're going in, and that for showing you, hey, you're making these moves and they're making an impact. But the score you see on Credit Karma is always going to be less than your actual FICO credit score, which is what your lenders are looking at. So you need to know that. But Credit Karma is great because for a lot of us, when you don't know where to start, it's a great place for you to see, especially when you don't know how to read your credit report, which a lot of us don't. When you don't know how to read it, you can go to services like Credit Karma. There are others, but Credit Karma being one of the most popular. And they have a bunch of free options. And you can see, hey, I have too much credit utilization. Don't know what that is? Hold on, I'm going to tell you. Hey, my payment history is bad. I don't have enough credit age. I have all these inquiries and I can see this impact on my credit. It gives you, they even give you recommendations of things you can do or cards that you might want to utilize. There's a lot they can tell you. But before you can go even any further with that, there's some basic information that you need to know about your credit score, what impacts it, and even the range of what makes a good one. All right, so hold on. After this commercial break, we're going to come back and we're going to break down the components of your credit score, the range, and start you on the path of how you can make that score skyrocket. Stay tuned. Ladies, are you looking to move your office from your kitchen table to a space of your own? Are you ready to take your business to the next level? Are you looking for co-working and community? Well, then come join us at the Women's Business Center, RVA, located at 1510 Willow Lawn Drive, Suite 100, directly across the street from the Kroger at Willow Lawn. Visit us on the web at wbcrva.com or on social media at WBCRVA.
Listen, attorney Alex Taylor is a soldier in a suit, defending anyone with criminal charges, DUIs, and more. Call Alex Taylor, your soldier in a suit, at 804-500-5000.
I'm Alex Taylor. Don't face your criminal charges alone. Put a former prosecutor with 30 years of experience on your side. Let me show you how a soldier fights for your freedom.
Call 804-500-5000 or go to alextaylorlaw.com. During these challenging times, Richmond Dentistry for Children wants to remind you that we've been here for you and your children for over 25 years. Your child's body is their temple and their teeth are the doorway to good health. We provide compassionate pediatric dental care Monday through Friday. Call 804-780-2888 for your appointment or come to our office at 300 West Broad Street. RichmondDentistryForChildren.com, serving Central Virginia. Follow us on Facebook and Instagram.
Wouldn't it be convenient and safe to communicate with your dentist, pediatrician, medical doctor, or mental health professional anywhere you are without actually traveling to our medical centers?
Well, you can with a televisit at your local Capital Area Health Network. Call us at 780-0840 or go to cahealthnet.org. Find out how a televisit may be your best option. We are the Capital Area Health Network, the heart of the community.
Welcome back, welcome back, welcome back. We're talking your current personal credit, and at some point we'll switch over to talking about how that impacts or can move the needle for your business credit. So let's start at the beginning, okay? So first and foremost, I am mostly going to talk about your FICO credit score because that's the one that, generally speaking, that your lenders are going to look for when you're looking to get house, car, whatever it is you're looking to purchase on the personal side. Business credit has its own way of being monitored. Not talking about that quite yet because, as I said before, to get to the business credit, your personal credit has to be good. Now, there are lots of options out there, or there are options out there about no personal guarantee and other kind of things, or EIN only loans. I'm not getting into all of that because that's really not where you need to start. You need to clean up what you've already messed up or what you've ignored. So let's really talk about personal credit. So the first thing is personal credit, or when we talk about your credit score, it's really just a tally of the history of things that you have done or not done utilizing credit. So every credit card, student loan, line of credit, you've probably done it and not even recognized it. Let's say you bought something on credit. You bought something, you got something, you received it without actually handing over cash. You've probably done a credit transaction. So the person you did that credit transaction with is more than likely tracking it. And the thing that you might not realize is that a big ding happens when you make a purchase, and then when it's time for you to pay, you're a day late. Did you hear me? A day late can have like negative impacts on your credit. So first, the range of credit is not 0 to 850. You start off at a 300. Like everyone starts off at a 300. So if you have done absolutely nothing, I still hope you're not down to the 300, but it can happen. Normally you get to 300 when you've done all kinds of crazy things, and that's how you end up there. So the range of your credit goes 300 to 629 is bad credit. So if you're just scraping 600, which is not that hard to do, it's not that hard to get to 600. Just FYI, I'll tell you about it in just a minute. 630 to 689 is fair. Okay? 690 to 719 is good. 720 to 850, excellent. But for a lot of the transactions that you're trying to do, you don't actually even need excellent credit. Like generally speaking, if you are around 680, I think last week I talked about some of the things, especially when it comes to business credit. If your personal credit is at least 650, 680 is even better. 700 is the best option. And you have a good credit mix, there's lots of amazing things that you can do. If you hear me say a word you don't know what I'm talking about, drop me a message, let me know, but I'm going to try to make sure I'm telling you so that you don't even have to ask. All right? So that's the credit range. What impacts it? What takes it from 300 to 850? All right? Well, first things first, 35% of your credit score is going to be based on your payment history. Right? So you borrow from the bank, you have a credit card, and you're like, I'll pay it back whenever. That's not the right answer. Your credit cards, secured or unsecured, whatever the case may be, your loans, if you have a bill and the due date is the 15th and you pay it on the 17th, if they were reporting your credit on the 16th, you are now officially late. Period. And that window of late is anything from 1 to 30. So they normally measure it in 30, 60, and 90-day tardiness. But what you need to know is that 30-day window could actually be on day 28. It's a matter of when does the person that lent you the money that you bought whatever from on credit, what day are they reporting? Credit scores are based on the activity of the day pulled. So your credit score today could be totally different from your credit score tomorrow. So you have to learn the cycles of your credit cards, your lenders, to know what's the window of when they're reporting. And they tell you. You get a credit card and they tell you this cycle is every 25 days. It's every 28 days. They're telling you right then and there, this is when we're going to report about this account. Okay? So you need to look at that window to know when is it okay to, I'm going to pay it. One of my favorite habits is to pay. I always like to pay in the week that something is due. And there's a reason for that as well. I don't want to get too advanced, but I want to make sure you have some basic information. Because here's the thing. I used to get my credit card bill and pay it immediately. And doesn't that sound like a great thing to do? It's not. Because here's the thing. As far as a credit bureau is concerned, I never used the card. I'm not getting credit for my credit usage. So what happens is I look at my credit card statement. I look at the due date. If it's due on the 15th, I'm going to pay it the 10th through the 15th. somewhere in that week window is when I will make the payment, because that means the credit card issuer is reporting to the credit bureaus that I used the card, and then they're also reporting that I made a payment on the card. So this is showing that I am wise with my credit usage. Not only do I have the card, but I'm using it, and I'm using it wisely, right? So that's one thing right there for a lot of you. So talking about what makes up that credit score, once again, 35% is payment history. And so a lot of times when you are late and making late payments, it has such a big ding on your credit, and you're wondering why. And so this is what I'll say. When you finally get that credit report and you're looking, you're seeing that you have that 580, that 600, and you're like, oh, what's going on? And you see that markings because you can see them, right? To see, oh, I have a bunch of late payments. My payment history shows it. I tend to be late on making my payments. If you are current and have been maybe 3 months with your credit card issuer, you can actually give them a call and request that they remove those late payment marks. They won't always do it, but you can try. There are other options, but that involves hiring someone like me to do it for you. And in the meantime, you can actually reach out directly to the credit card issuer and say, hey, I'm in good standing. This is what happened. Can you please remove those late payments so that we can increase my payment history? Because that is 35% of your credit score. Okay? Want to know more? We're going to take some other tips. It'll be right back after this commercial break.
Life can be a struggle. Find hope, healing, and answers at the Abundant Life Church of Christ, a place to encounter God through uplifting worship, singing, prayer, the preach word, and fellowship. One step can change your life. One step could shift your destiny. There has never been a better time to take that step than now. Come be our guest every Sunday at 10 a.m. at the Abundant Life Church of Christ, a place where you belong.
Are you ready to level up your smartphone videography skills? Want to learn how to capture better interviews, content, and learn how to edit using Canva? Whether you are a beginner looking to dive into the world of videography or an experienced creator seeking to enhance your skills, then our Learn by Doing workshops are for you. Reserve your spot and start creating incredible videos. Visit powerupvideo.com today. Click Workshops.
All right, now it's time for fashion and entrepreneurship with Ashley Jefferson.
Check in on your strong friends. That's what I'm talking about right now on fashion and entrepreneurship. I'm your host, Ashley Jefferson. And you ever heard that phrase saying, check in on your strong friends? Well, I'm going to share with you some tips on how to do that without seeming too intrusive. So, first of all, let's choose the right timing. Find a suitable moment when both of you are relatively free and can engage in such a topic. You don't want to seem too intrusive. You don't want to just pop it up on them because then they might, get a little bit defensive. Next, be genuine. Approach the conversation with sincerity and genuine concern. Let them know you're reaching out because you actually care and not because you're just trying to find gossip. But again, that comes with finding the right time. And the right time might not be your timing. Keep that in mind. You're thinking about them first. Start with a casual message. Begin the conversation with a friendly, a non-intrusive thing. You might actually want to start talking about business just a little bit because business gets people's ears up, especially the entrepreneur. And remember, this is fashion and entrepreneurship, what we're talking about. But then you do want to ask them directly, are you okay? What's going on? Also, you may want to consider gently saying, I've noticed this. Is everything okay? Make sure you take the fault saying, okay, I could be wrong. I'm not a therapist. I'm just checking in. Sometimes you can just say, I'm just checking in on a strong friend. The thing is, a lot of times as entrepreneurs, we will put up a wall, we will put up a barrier, we'll put up a block because that's what we know to do. We also compartmentalize. So we'll have a lot of things going on so we can stay focused on the main goal, which is building and growing our brand and business. As a strong friend, you want to make sure, or as the person who cares about a strong friend, you want to make sure that you're not invasive or intrusive, that you don't want to break down a barrier, but you just want to gently kind of knock on the door a bit, just so you can make sure that they're okay. Starting off with a casual message would be great for that. Show them empathy. Express genuine concern, and then respect their boundaries. If they say, I don't want to talk about this right now, everything is fine, that's cool. Quite frankly, most of the time, we're not therapists. We're entrepreneurs. If they don't want to talk to you, that's fine. Don't push anymore. Just let it go. But before you check out, just say that you're there for them and you genuinely care. A lot of times when we're busy and we're working, we don't know if anybody really genuinely cares about them or us. So just try to say, okay, I genuinely care. If you have any questions or if you want to talk later on, just let me know. You know, sometimes, again, we're trying to put on this face. It can be hard for your friend or the strong friend to kind of take off that face and be vulnerable. And you also have to respect the time that they may not want to be vulnerable with you, and that's okay. But just you planting that seed and asking that question, it may allow them to open up with someone else so that we don't have any cares or concerns or that anything more, crazy might go on. And then lastly, I will say this, try to check in regularly. Now, whatever your understanding of regularly is, do that. I wouldn't say every day, but I would say maybe once a month. Once a month. If you're close enough to that friend where you can check in weekly and just say, how's it going? Then do that. But if you're not and you just kind of notice something along the way, then maybe just recircle this once a month, because that's typically not too intrusive and they won't, find any negativity coming from that. Speaking of negativity, again, you must remain humble, remain sincere, and remain gentle when you're checking in with people and their mental health, especially the strong friend. You do not want to seem offensive and you don't want to seem intrusive. So a lot of times people will take what you're saying, even though you may care and be concerned, but they may think you're going to be judgmental or that you're going to be gossipy. So you have to be very gentle when you check in on your strong friends. Keep in mind, your strong friends are strong in every aspect of their life. That's why they got that term, the strong friend. So don't expect them to just lay down when you come around. No, they may still be strong. So you just want to stay gentle, stay humble, and let them know that you'll be there for them. Mental health is a big deal. It's important that we take it seriously, you guys. So I'm going to wrap this one up. I am your host, Ashley Jefferson, owner of Very Ashley and VA Style Magazine, right here for Fashion and Entrepreneurship segment on WorkHARDAholics. You can find me on vastylemagazine.com and shopveryashley.com and on Shop Very Ashley on all social media platforms. And this is me right now checking in on you, because all of you are my strong friends. And I want to know if there's ever anything going on with you up here or in here and you feel like you need a friend, you can definitely shoot me a message, send me a DM, send me an email, ashley@shopveryashley.com. Would love to talk to you guys. Take care.
And coming up next, we have financial news you can use from Lawrence Roberts.
I'm Lawrence Roberts with Financial News You Can Use. Again, I'm here to talk to you about some of the different myths that we talked about before. So last myth we talked about earlier was about leaving something behind when my parents didn't leave me anything. My kids have to figure it out. That's fine and dandy, but when you leave something behind, it's not just you leaving something behind. It's about educating them, making sure they're taken care of and caring for them. All right? So I got more to say on that. I'll tell you more about that. Because reality is about irresponsibility and responsibility. You have a responsibility to take care of your next generation. You have a responsibility to take care of them while they're alive. So do it. Don't worry about the other part, okay? Now, if I leave them a lot of money, they will spend it on something, on someone else or somebody else. Well, there's all different ways of looking at that. But you know what? Leaving them enough money, no one's going to come in there and say, hey, I'm going to take advantage of them, because you elevated them. Somebody has to, someone's going to come into their life or whatever, they have to come in with their own money. They have to come in at a new level, because they don't need someone else to provide for them. You've already provided for them. That's the key to it. You've already provided for them. So now they don't need anyone else to come in and provide for them. That's what you've done. All right? Now, real quick, I'm going to give you a quote by Martin Luther King. Every person must decide whether to walk in the light of creative altruism or in the darkness of destructive selfishness. This is the judgment. life's most persistent and urgent question is, what are you doing for others? Again, what are you really doing for others? Well, I've heard people say, hey, if I leave them something, they're just going to blow it anyway. Financial literacy comes from education. You train them, teach them, and prepare them. You do that. It's not about, hey, I'm going to leave you something, so you need to know what to do with this. You teach them how to manage their money. You teach them how to do these different things. All that's the importance of all of that stuff, okay? Because that's the reality of it. And really, leaving a legacy is more than just, hey, I'm going to leave somebody mom's apple pie recipe, which is nice. I'm going to leave them my retirement account, my IRA, my 401k, these other investments, which is nice. But if you had a choice accepting a pile of money, two different piles of money, pile of money A and money in bucket B, A, you got to pay taxes on it. B is no taxes. Which one would you want? That's legacy. That's preparing and taking them to the next level and preparing a legacy and leaving a legacy behind. That's the reality of it. I only need enough life insurance or only enough insurance for burial. Again, unless you have a crystal ball totally and how you're going to pass away and what's going to happen, you don't know the exact amount it's going to cost for burial. You can estimate, but things happen. It could happen. So stop worrying about that. Take care of things the way you're supposed to. That's what that's all about. Again, I'm here to talk to you about some of the different things, talking about financial news you can use. All these different things are really a reality to you because this is real, okay? So when you look at that, and I talked about it earlier as far as preparing for retirement, because retirement's around the way, and the lifestyle you have in retirement and so on. Well, just to give you an update, because the federal government, the federal government's done a lot of different things and they're constantly at work. So this here is just two little things they talked about in the Secure Act. It's called Secure 2.0 Act of 2022. One of the things that came out of this here through Congress, you could put more money into your retirement account. So they increased the limits. Also, this little thing called RMDs. What are RMDs? RMDs, required minimum distribution. So right now, as it is today, you have to be, the max you can hold your money in retirement account is age 72. It's going up to 73, then eventually it's going to get to age 75 before you have to start taking that money. And when you have to start taking that money, it's because Uncle Sam wants his taxes. But that you still have a little more time to grow your money too. That's what that's about. Getting the opportunity to grow more money for retirement. The other thing is looking at your 401k and catch up. You're able to put in when I say 401k, please do not think it's only including only the 401k. So I mean 401k, IRA, 457, all those different retirement accounts that's tax deferred. Now you can put up to $7,500 into it once you join the over 50 club. So if you're part of the over 50 club, take advantage of that opportunity to put more money into your retirement account. It's called the catch-up. It's not called a catch-up for the economy. It's catch-up for a reason. Catch up on your retirement account because you may not have put money into it earlier as much as you could have. These are just some tidbits on as far as what the government is doing to help you prepare and plan for retirement. Again, I'm Lawrence Roberts with Financial News You Can Use.
Welcome back. Thank you once again to our sponsors who make this show possible. And also keep in mind, you too could be that sponsor. Just drop us a line at admin@WorkHARDaholics.com. Okay, so we're talking about your credit score. Okay, so once again, we have established the range for your credit score is 300 to 850, recognizing that there are more than one type of credit score. As I said before, the type of the score that you see on Credit Karma is much more positive than your standard FICO score. That's your that your lenders are going to be looking at. Okay, so we were just talking about a big chunk of that credit score is your payment history. It's 35%. 30% is your credit utilization. So what that means is you have a total amount of credit. Let's just say, let's be basic. Let's keep the math easy. Let's say you have $1,000 of credit. That means that you either have credit cards, a line of credit, a loan, whatever. The total amount of your credit is $1,000. If you have $1,000 of credit on your card, your credit card, and you have used $850, and even though you're paying it back and you've not been late, your payment history is fine, it can even be 100%, you're always paying on time, you still have a lower credit score because what's called credit utilization. You're using too much. In business, you can use all the credit. You are rewarded for using the credit. In personal, you're penalized. So generally speaking, if you have $1,000 worth of credit, you should be using far less. 40% maximum, which is really, really high. 30% is average and okay. But if you're really looking to make moves, you should really be under 4%. If you're using less than 4%, at least less than 10% of your total credit. So if you have $1,000 in credit, you really shouldn't be using more than $100 at a time. If you use more than $100, you should be paying it back immediately. But you should show that you're not living off of your credit card, that you have money, you're paying things back, you're responsible. And then here's the thing. On personal credit, the more that you pay back, the least that you use, the more they'll give you. Amazing, right? So if they say, oh my God, they have $1,000 and they're only using 10% or less, let's give them more, right? And something to note when it comes to that is that every 3 months, you should act, if you are doing these things, you have great payment history, get that 100% payment history, your utilization is less than 10 or less than 4, even, magic number there. Every 3 months, you can reach back out to your credit card, your lender, and say, hey, I'd like to increase my credit limit. They won't always tell you that. They won't always offer it, but it's always there on the table, right? These two things alone, if you have an excellent payment history and a low credit utilization, that added onto your 300 is going to place you automatically in the 600s. So you're either going to be right there on the cusp of fair. You really should be in the fair range if you only do those two things, that you make sure you're paying on time, okay? And that you're not maxed out on your credit cards. You're not maxed out on all of your credit. That alone will get you into a decent range. And then the real tweaking begins. The next thing that makes up your credit score is going to be the credit age. All right. So if you're just getting started, I'm sorry. There are workarounds to that, but that's not what we're talking about. So once again, for the workarounds, you're going to need to enlist a professional. But otherwise, you can start today. You can get a credit card that you're going to use wisely. You can get a secured credit card if you've already done so much damage that you don't know what else you can do. All right. You can get a secured credit. Secured means if you can get let's say, I think the average is like around $300. You can get a secured credit card from your bank, which is a good way to start a relationship, your credit union, an even better relationship, or from Capital One or whomever. And so you get the secured card and you do all the things I just said. You still make sure that your payment history shows that you're paying on time all the time. Your utilization is low. And then basically you open up a savings account, or they open up a savings account with the dollars you've already put in. They give you a card that matches the amount of how much you gave and secured. And then you're going to be paying on the credit card. So you're going to use it. You'll spend $200. You're going to pay it back. You're going to end up paying interest, maybe, depending on when you pay it back. But the bottom line is you're establishing credit. Credit age is how long have you had credit? And if you're like my mom or other generations where it's like, we don't do credit, then you still have no credit history. And that's why you have a low score as well. You haven't been playing the credit game. So we'll start there. So once again, 35% is payment history, 30% is credit utilization. We get down to 15% with credit age. Then we get down to two categories that both have 10% each, right? One is type of credit, and the other are inquiries. And this is where we have to tread carefully. Types of credit means they don't want to just see that you just have credit cards, right? They talk about revolving, installment, and charge, right? So charge is literally you have an account, you have a card for Walmart, and you can only buy Walmart items with that card. That's a charge card. They used to do them a lot with like JCPenney and those type of stores. It's a charge card. It's only for that store. So you pay for it. You got 30 days or whatever to pay it off. It's a charge card. But if you look at installments or revolving, it means you're either dealing with a payment that's the same every month, like your mortgage or a loan, or like your credit card, where every month the amount is different, right? It's not the same amount, but every month you're making a payment. They like to see a mixture there because it shows that you're not just credit card heavy. Someone trusted you to actually have a loan or a line of credit, right? You can mix in the charge. A lot of the charge cards now seem to be like for jewelry and electronics, but whatever the case may be. So all of that is just a part of what makes up your credit score, right? So we're just getting started, but I wanted to make sure you at least had that much you can get started with. So if you need to go look at your credit score and see what you have going on, it's time for you to pull your credit report if you haven't before. How can you get your credit report? There's several options. Let's talk about the free ones first, okay? You can do Credit Karma. You can do annual credit report, the website you can go to. If you have every year, you can get one free copy of your credit report from all three bureaus. We didn't even get into the three bureaus. Maybe next week. We covered a lot, but we didn't cover everything, okay? Or if you applied for something, and this is not the way I want you to do it, but if you already applied for something and got denied, you can make a request. In the letter, it'll tell you, you can request the information on how we made this decision, and you can then get copies of your credit report, okay? So that's just to get you started. If you really want to dig down deep, as I've mentioned before, we're just starting off as a credit counselor. Why? Once again, because we want people to have business credit, but you got to have personal first. So if you really want to, you can reach out, admin at WorkHARDAholics. We'll get you in, have a conversation, do a credit consultation, see what we can do from there. Otherwise, I've given you some tips to get started that you can at least make a little difference in your credit today. All right, as we always say, live better, do better, be better, and happy entrepreneuring. Ta-ta. Like, share, subscribe, repeat. Like, share, subscribe, repeat. 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 Thanks for tuning in to WorkHARDaholics. Support our show by following on YouTube and all major social media platforms at WorkHARDaholic. Until next week, happy entrepreneuring.